Hello, my friends. Hello, my friends. How are you doing? Hope you're all very well. I am here, Rocky Outcrop, to do your morning financial show. This is currently a Patreon only stream, but it will be made public during the stream. So if you're tuning in later on and you're watching this from the start, hey, welcome. And that's the reason why there's not so many people here right now. And then later on, there'll be more people. So check it out. There's 7 viewers, 3 likes. Hey, hey. Chat rate 2, which is cool. Nice to see you, Pineapple Head, AV80, Phil, Vic Vince. Well, I just thought what I would do here is do a show just for you guys for a wee while, for half an hour, and then I'll do a half-hour show public. The idea being that I really appreciate you people. I really massively appreciate people, and I wanted to make some content for you guys, so that there's that extra value layer there for everybody. So that's cool, and yeah. So let me know what yous would like to take a look at or anything like that, and I'll try and do that. A bit chilly. There we go. That'll make it a bit warmer, right? Good morning, everybody. Okay, so yeah, that's great. Not loads and loads of chat at the minute. You can see oil's actually gone from being a red doji to a green doji on the weekly time frame since I've actually been live. You might not have noticed that. Let's go down to the 24-hour time frame and see that it's maybe just well, actually, let's just look at it on a smaller time frame. The price of oil, huh? 67.44 a target for us. We've got 2 targets here. It's an interesting one, isn't it? With the flash, where we've got those 2 kind of competing targets. For me, I suppose, looking at this, if I'd already got in looking for that high one, then that would be okay. But if I wasn't already in on the trade on this one, then I wouldn't be wanting to like trade up for that when this is still on the cards right now. You know, I'd be looking for a better entry if I was going for that upper one. So in brief, then you could say that this converts it from like a buy signal to a hold signal, and whatever. Now, as well, if I'd also gone short on this at this resistance point, having already, thought to myself, well, there's a target up there, but it's coming up to this point, and this flash would have been on the charts the whole time on the way up towards here. I'd have known to take profit at my horizontal I'd already marked in, and I would have taken profit there, and then maybe I've gone short as well and taken profit there. Who knows? I don't know necessarily. I don't know, because this is speculating back in you want to imagine that you'd always make the right decisions, right? You always want to imagine that you would, but in reality, in reality, if you do that, you're liable to convince yourself of stuff that's not necessarily the case. Oh, Jamie's calling me. Just a second, everybody. Hey, yeah. Good morning. Hello? Guess I missed it. Great. Okay, cool. Anyway, so how are you doing? Nat Gas got hammered too. Good to see you, Christy. Good to see you go to win too. Win. Good morning. Smugslug, good to see you. What to make of these 2 flashes? Yes, exactly. Well, that's good, right? So we were chatting about that. Good to know that I've covered that before noticing the chat there. I actually missed the biggest move on my oil short because I took profit too early. Well, yeah, I don't want to disagree with you, man, or whatever, or tell you that you're wrong or any of that sort of stuff. Taking profit too early, it's like it's cool. It's the best problem to have. Well, yeah, you're right, man. You don't want to be taking profits too early. You want to maximize your profits, which in effect will will help minimize the average impact of those losses, and obviously maximize your profitability and your kind of efficiency and everything overall. But you know, that's the best problem to have. Of all the problems you can have trading, taking profit too early, you know, nobody ever went bust taking profit. But hey, how was your B-Day party, Rock? It was good, man. It was good. Thank you so much. Thank you so much. I still really have to kind of actually do the whole celebrating with family aspect of things. Didn't really do that properly. I got to see Jamie and stuff, but I'm going to be seeing them today, hopefully, a bit, or go and see my dad and stuff like that. I'm so wrecked constantly, you know, so wrecked, man. Totally worked myself to the bone recently. Completely wrecked. I mean, last night I stayed up too late as well after the show and was there for Tadpole games and stuff like that, you know. Then I went to bed and I was like, oh, I'll just say hello and everything and watch the first 10 minutes of Tadpole games and do a couple of answers or whatever, and then I'll go to bed. So I did, and I was lying there trying to sleep. I couldn't sleep. Got a message from Jamie after he finished Tadpole games and all the rest of it on my phone, and I was like, I'm still not asleep. So my time, I went to sleep at about 7 a.m. Ish, I don't know, and then I was up again at 10 a.m. And then I went back to bed, right? Tried to sleep for a bit, but that didn't really work. And then I was out of bed again, and a couple hours later, going. So that's me. Yeah. I had the same on Novanex, an ASX stock. Held it forever, took small profit and missed a 300% move. Yeah. Jeez. Right. Okay. Yeah. That's when it really stings, man. That's when it really stings. Oof. Ouch. That's right. I was just thinking, how do you sleep? Because you always seem so active. Yeah, man. Bad. Badly. Not fantastically. You know what's happening here, by the way, as well at the minute? I'm due to receive a delivery by 3 o'clock, which will have a jumper inside it. A nice new hooded sweatshirt. And I'm I'm sat here going, oh, it's a bit chilly, because I don't want to wear anything else till it arrives. Being precious. I've braided my hair. Okay, so US oil, right? What's the chat with it though? We've got these two flashes, and of course, both of these could be filled in without anything actually changing. No, obviously, right? Look, you know, if we hit this lower flash, nothing changes. You know, that speaks for itself. This one not quite so clear. It also nothing changes. You know, we've got a high, and then if we come in here, you know, a lower high. So what you'd be hoping to see would be for us to actually recover slightly higher than this high, and that'll time nicely as well as it happens. It's not like I need to, you know, it's not like I need to put any sort of sales aspect into this thing. You know, when I talk about this during the fully public live shows, I kind of explain how you use it in a way that kind of combines, you know, which is in effect as well kind of slightly salesy, you know, slightly. Not really, I'm not a salesman in that sense at all, but I say to people, you know, and you can use this thing, you can do this, and it's kind of like showing a feature of it in a sense. But the truth is, as we all know, that and everybody is, it's not like I hide it or anything, is that and I tell people, like, actually, you know, I'm quite bad at selling the thing. Tell people that we're making this up, so to speak. We're inventing this, you know, we're inventing this. There isn't somebody out there who we can rely on and say, somebody else said this is amazing, so now I'm going to start thinking it's amazing too. It's like, I'll show you behind the curtain, you know. I'm here, a real human being, a real legit human being who made this thing, who's able to say, well, let's figure out if it's perfect together, etc. So anyway, the 113 is a Fibonacci extension point, and it's one of the shallowest Fibonacci. It's like the shallowest Fibonacci level that you can go to. Obviously, though, it's an extension level, so it's up. So you know, the movement between 0 and 236 is bigger than the movement between 1 and 1.13, you know. So generally speaking, but it's still a significant area. If I just kind of show you the percentage moves that happen between these areas, up here that's 1%, and and then it's just another sort of 1.13, you know, another 1% up, you know, that sort of thing. So down at the lows, though, of course, once you've done this, that's a couple of percent to get to the 236. Now that makes sense. That's obvious because of the numbers involved. Anyway, it's obvious. So but it's a shallow one. But it is a number. It is an actual Fibonacci number thing and everything. So it's got kind of that element of confluence to it, right? So rather than saying something like simply, if we make it an additional 10% past, or if we make it, you know, I wanted to the design aspect of this theory here is to use something that exists for a reason in the world. So this is a relative move versus the area where the flash came in at, down to the full move away from the flash. So it's a measure in between where the flash should be, and then that much extra on top. And you know, rather than just kind of you could do it with other things like percentages and stuff like that. But then we can do this to a certain extent, and then this helps as a qualifier along the lines of like how on a triple moving average strategy, if you're using a dual moving average strategy and you're playing off of crosses, then a third moving average will give you a kind of a bit of a qualifier where, you know, so if say you're doing crosses between say the 18 and 50 moving average, then you also had the 150 moving average on there. These are made up numbers just to make the point. You would know that so long as you're above the 150, then you can go long, and then you would only take the positive crosses and you wouldn't take the negative ones because the overall trend is up and you might not actually succeed, right? Good. It's a good strategy. But that other moving average in there, it's just a qualifier. The third moving average is just a qualifier. Another one. And this is just like a qualifier here as well. It's just a little thing. It's an acid test, if you like, a litmus test to say, well, look, yeah, I mean, we did make it up to here, but we only made it so far. Anyway, the point that I'm making here is that if we did go up to this 1.13 and then, you know, sustained prices up above the flash level, then what that would represent would be, of course, coming back into the pitchfork, taking out one of our highs and one of our inflection points. 10 minutes, that package is late. One of these inflection points, and that would be, and that's a qualifier, and that's what that's all about, you know. And that's, you know, so if we hit this, and really I'm trying to make it so that on this flash, it's like we're playing it really to the penny, you know, and with the extension on beyond to the 113, it's kind of playing it to the penny as well. If we go a penny above that line, then it makes a difference. Now, why am I being so binary about things? Well, because in no small part am I looking at this in along the lines of well, no, it doesn't matter about how big or small a part it is. It's just an element of what I'm looking at here is kind of kind of binary. You know, it is that you want it to register with people, and I don't think other people are looking at this. I just think that this tends to work in terms of you know, we're going to have had a consolidation phase that runs in here that creates the conditions for a flash to exist in the first place, and then after that, there's going to have been a consolidation phase there. So then going up past that distance is going to take out that chunk of that consolidation phase anyway. So like there's this binary aspect. Anyway, whatever. Hi Rocky and everyone. Hi Ms. A. Good to see you. Lovely to see you. Lovely to see you. Phil, can you also look at Piton? Yeah, sure. Did anybody ask me to take a look at anything? Mana so far. Right, let's just go take a look at mana. This is another one that Vic was talking about shorting recently. I'm going to jump up to like the 4-hour time frame on this one so I can actually see the designs that we had on here. Did I come back and re-talk about this in a different way after? What did I do here? Have I got the wrong chart? What did I do? I know that I was talking about this. I know that I talked about the wedge and the ability for it to move outside of it a little bit. I'm not sure when and where. Yeah, okay. So anyway, in this region, I was talking about how it could push up a bit more. I don't know what the price was when we were doing it. You might have a better idea than I do. And we were talking about how I was saying it could still push up, you know. And in terms of shorting this thing, and it's a crypto, and the temptation would be for a lot of people, especially if you're shorting it, would be to use multiple levels of leverage, because you're using leverage to short in the first place. Even if you're just not leverage, but you're using margin to short. Now, if you're using 100% margin, that's cool, but it's still on margin. And if you're using then anything less, then you're using some form of leverage there, you know. And when you're trading on margin, then you're you know, as soon as it moves in your favor, then of course you're using some figure less than one in terms of your leverage. And as soon as it moves against you, then you're using a figure greater than one on your leverage, even if you opened up your trade at 100% margin covered. You understand? I'm sure you do. So anyway, the temptation exists there for people to push it so that they're going, you know, that they're using bigger, bigger leverage. You know, as soon as it goes against you, that number's starting to increase. So you open up a trade with 100% margin on it, and then it moves against you 50% or whatever. Then you're now actually using 2x leverage instead of 1x leverage. That's the reality of it. So anyway, just to point that out. So what ended up happening here is we did push up a little bit. Now you could make some sorts of debates about whether or not this could have been positioned differently, but actually, as it happens, you know, it's pretty slack with you know, it's pretty. I've left a lot of room on here. I just wanted to cover this real quick before we cover what's happening next, because the realities of trading, right, are that you can have a theoretical discussion with somebody about how there's a wedge on a chart, and you can look at it yourself and say there's a wedge on the chart, and you're going to trade the thing, but then you're ending up and you're looking to short it, all right, and then you take a short off the back of something here at 550, and then it moves up to 588. That's a 30-cent move and 15% against you. And if you use 10x, then if you use 10x leverage, then this would have wiped you out. In fact, maybe if you'd used 7 or 8 leverage, you'd have been pretty close. You would have probably have also been considering to yourself, well, if I'm going to lose 100% of my trade here in that move, then I'll probably manage my position by stopping out a little bit earlier. So it moves a couple of percent against you, and say it moves 2% against you, and you're using 10x. That's 20% of your margin gone in that trade. So if you put on a trade for $1,000 at 10x, and then it moves 2% against you, and you stop out, well, bye $200. You know. So this is significant, but it was kind of like a case of, it could push up a bit, but we were agreeing in the sense that this was a short potential. Then of course we did push down to the lower end, and now it looks like we're breaking out of the thing. So, you know, we had that little bit of kind of exuberance up there, which is just going to add more fuel to the fire on the downside. But what we have here is the question, and it's so nice on this chart to be back here to see that there was all of these concepts from before we did any of them are fully playing out at this point. So we drew on the parallel channel, we drew on the wedge, and then we talked about how it could go up a wee bit and it would be dangerous. And I've explained why it's dangerous now in this Patreon stream, because that's useful. It would be dangerous, right? Drop back down, and now it's at the edge of the wedge. A failed wedge move, essentially, only coming down to fake out territory. Let me just show you in terms of, if you were thinking about this, like, okay, here, let's call that fake out territory there, and let's call that sort of fake out territory there, or whatever. I don't know, whatever, you know, if you're thinking, we've only come down to these regions where we've been at before, anyway, so far in this kind of horizontal support and resistance-ish. No, not quite. Not quite, but anyway, we've only come down to where where the parallel channel would be. We would have a lot more to go should we wanted to actually do that. Let's just stick on the full sort of measured move thing and say that it'd be going this distance that it's gone kind of again. It's at 447, so the target on this one could easily be $4. So that's another 10% drop down there. And obviously then again, you know, if you were using 10x leverage and shorting this, and it moved 10%, and you put $1,000 in, then after that move you'd be up by 100%. So you would then have $1,000. By the time it got down here, your account, if it shows varying levels, it depends on where you're trading. It depends, but if you're trading on, I'm not going to start going through the different exchanges and explain all this, right? But it could change the figure. It probably would. I think on all of them. I'm thinking Binance and the rest of them. It would change it so that it would say that your leverage at that point was 2x, right, or whatever. Yeah, whatever. You can do the math. Look, honestly, the story I said earlier on about how I haven't slept much, it's going to affect maths more than anything. So, right, yeah, so obviously then you'd want to be taking profits there, right? You really would. You really, truly would. Because you'd have made, you'd have doubled your account 100%. Now, even if you're just doing it on 1x, you'd make 10%, so that $1,000 becomes $1,100, and the risk here is low. Now, this is a point which where, of course, as well, there will be some people out there who would be looking to long this because of the channel aspect. So let's just see, we've come very low on the stochastics. We're here, we haven't made it into the bearish control zone. We've not like changed it. This hasn't changed us into a bearish fashion on the 4 hour quite yet, which is where we'd be looking for that. So we did get a dip into the bearish control zone just here at this point, and it has led down a little bit further, but it's quite tight on that one. I wouldn't say it's necessarily a change in conditions quite yet. So there could be some inflection in here at this point, which means, again, if you did short this from the high of that wedge anywhere in that region, and you're looking to come down here and take profit, and you're looking for the full measured move of profit from here, which would actually, of the breakout territory, which actually would take you down to 360. So instead of $4, I'm sorry, I said that wrong earlier. Gosh, I'm tired. So it would be like down to 360. So you got another 20% that you could go. Then you'd still be taking profits here, right? You still would be. You still be taking some profits here. You still take a third off your position. That's what had happened afterwards. Anyway, yes, Vic, you're right about this. This one obviously is breaking the wedge here. It could even be breaking the sort of parallel channel that it's within. It hasn't fully got into bearish mode quite yet, but doing those things would push it further into bearish mode. Oh fuck yeah. We've also got this down here at $4. So like, yeah, we're going to $4, folks. I mean, like, this is happening, right? This is I don't want to be the guy that's all super and this will be a public stream in like 5 minutes, so but at least for you guys in the Patreon, even though it's going public in a minute. Yeah, this thing's going to fucking $4, right? So this is so you can see it on the flash there. It's nice to have that confirmation, and this is another use case for that. Right, we're doing the TE anyway. You still have to do your TE anyway. You still have to think about where you would take profits at, and don't forget that don't forget that that you should do that, because here's an example of how you can get a flash, and how it can really kind of, when you're looking towards something, it can move against you in a way that dramatically would change the outcome from that trade. That's cool. That's a nice little bit of chat on that one. What did we get here? Can we look at Novanex? Novanex. ASX Australia. Novanex. What is Novanex? Every time I look at an Australian stock, I immediately think, well, it's probably a mining stock. It's mining or beer, guys. Mining or beer. I'm just kidding. But what is Novanex? Is a battery materials and technology company. Cool. Excellent. Right. Well, I mean, this is not good, obviously. We know there's 535. How high is that? 1227. Fucking hell. Is that going to be one of the ones that gets left on there as a result of having moved so far? Or is it something that would get 90% of a retrace towards it? There's a retrace would be 699. So 90% of that. $6, 630 sort of retrace. Could it retrace down 630 or so? Could it do that? Could it come down and test off of this area just over here and get 90% of the way towards that? That could happen, but anyway, instead we know that, but we don't want to let it influence us too much. The funny thing is that obviously this hugely upward moving chart would instantly influence you to being bullish in the first place, so it's not so bad having this kind of affect your emotions if you're looking at the charts. Anyhow, this 15-minute time frame is too small, because you can see that there's so you can see that there's this parabolic market. So quick thing about parabolic markets is that when they do break, they tend to actually retrace 80% of the move that they've had to get there. So that can coincides perfectly with that flash. And could we see prices of 630 on this thing or so? Could we, from where we've come from at the minute, instead of, you know, could we? Well, we could. Let's see in terms of fibs what we would need to be staying above on the way up here so far. Yep, this last little dip down here, 803. Now that's obviously a huge move considering that the prices are $12 and that's 8, so that's $4 move on a thing, which is, you know, losing a third of its value to get to there. But that's you know, one of those aspects. And this is on the broader term. This is looking back to May, so we can bring this up to, well, here, the last kind of departure point, first off, after our last, you know, the last big inflection along the way here. And as well as this would be like one of the points at which you'd be bringing in your likely you be bringing in your wedge from. And the 236 on this one is, yeah, then past this last little dip down here at $10. If we drop down to $10, then the chances of us moving to 869 are very high. You know, it's like this would be your 382. So you can see the dynamic changing rapidly with this thing, and that's the result of the parabolic market, you know, and that's the result of when you break the parabolic trends, then why you go 80%, because you're kind of competing with so many other people's ideas where it's like, well, there's eagerness to go here, 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 and here, you know, so you could go to any of those because loads of people are looking for that to happen, yada yada. Anyway, the whole parabolic thing like that is kind of nicer seen. It's easy, it's kind of sketchy. It doesn't really, you know, it's not exactly you know, super fucking accurate type of stuff here. But you know, you do something like this, it's like a parabolic curve that you've got on the go here, kind of shows you like way, and that's a little bit off, really, if I'm honest. Like there's your parabolic curve, right? So that's what this is what Peter Brandt would be looking at, and you can see as well that this is kind of, you know, this is outside of this what's it called, wedge. So language is failing me now, right? So, you know, even if we consolidate here above the 236, it's somewhat less positive because it's involving a move outside of a parabolic curve. However, you know, you often do see then like some sort of consolidation then moving up the way, because really the curve is kind of more or less arbitrary in the way that it works. It's not so scientific methody, this thing, you know, it's a wee bit more kind of intuitive. And you could obviously continue up afterwards, but I would be more cautious at sideways movements following on from a parabola, you know. So a parabolic move, which is then followed by sideways movement, is obviously, you know, way less positive than a parabolic move followed by a little bit followed by another freaking parabolic move, right? And obviously it's a lot more positive than it just crashing immediately, except we so often do see markets that go sideways at the top and then crash down a wee bit. Let's just have a look over at something else. It's AMD still going, you know. So yeah, so you know, it's a lot more positive. It's so, you know, a bit of a parabolic move here. We break down, we take out the 236, and while obviously we do continue the overall trend, that during this phase of price action, the stuff dropped 15%, and it was worth, like, you know, trade. It was a tradable move in that. But then obviously this overall parabolic move did keep going. So the parabolic curve really on this, I don't know, whatever. And this, where do I have an example of us going sideways on this and then dropping? Is this not the chart I was thinking of? This might not be the chart. Yeah, this isn't the chart I was thinking of. It doesn't really matter. There are other examples. Oh, Bitcoin's probably got something like that I could show you. Yeah, here. So this type of move here, obviously you got your Fibonacci's, whatever. We came down to 236, we moved sideways. They did go a little bit higher, you know, we did go a little bit higher here, but this was like parabolic, this was sideways, this was a little bit higher. This actually overall ended up being inversely divergent too, did it not? Yeah, it did. And then we fail, and it's kind of like, that's the concept I'm getting at there in that front. Right, checking with chat. Oh, what was the thing though? I didn't actually do that other chart there, sorry. I'm going to need to speed things up a bit here because I'm obviously slow on it today. I'll make it public soon though. Right, so trend with a range, trade with a range. Yeah, no, this is AMD. No, Novanex. Yeah, parabolic move towards the top side. If we did drop down the way, by the way, the range on this could be expressed by that kind of red line. Where does it take us to? The 236 is of absolutely no surprise whatsoever. So do I think that we could be going there fairly soon? Well, it could happen, but obviously this is parabolic, and parabolic means kind of like hold on to your bollocks is what parabolic means most of the time. But you can see the last couple of highs, obviously here, a bit of bearish divergence. Could we go back down to test off the neutral line, or even come down to test the bearish control zone to say, hey, look, we're still going to keep going? And we could be listening to this noise at the minute. It's coming from my washing machine. I'm thinking to myself, that's not good. I hope that noise stops now, or else I'll have to get it fixed. Don't want that. Anyway, I don't know what's up with my hair. I look like some sort of idiot. Right. So yeah, I think that's probably going to be good enough for this chart, right? There's 15-minute time frame. Hit the auto button. Take a look here. We remember that there's the flash that's down here, kind of giving us that idea. We can see that we did push up to this area without the divergence, but actually we did get it. Now if you want to keep going long on this, that's totally fine. It is a parabolic market, so it could obviously keep going, but when it does move, it's going to have a range of like the equivalent of like $2 and lose a solid chunk of its price action there. Then it'll be a case of whether or not we actually break the parabolic trend, and then it's a case of whether we go down the way. And I think that's probably fairly comprehensive technical analysis. If you're looking for higher highs, etc., after this sort of stuff, then we've had that one already. This little inflection here, yep, we've had that one already. So we've done everything that we could do, and this is definitely extended. And overall on this one, I mean, despite the fact it's got a massively upward bullish market and all the rest of it, I'd probably be more inclined to take a short on this one just now if I was being perfectly honest with you, despite the fact it's anyway, there you have it. Right, right, cool. Which obviously sucks, but it's parabolic. Keep going. Let me see, there's 30-minute flash, I'm quite way up, pretty divergent. Yay, I fixed this. Hi Rocky, hi everybody. What's up? Have I missed any chat? I just want to see if not missed out on any sort of requests. The ZEC USDT has been moving, let's take a look at that. Glass of wine at 10 a.m, a good idea. Oh, Dober, I don't know, maybe. Good to see you, Nathan. Good to see you, Brew Lee. Good to see you reincarnated. Oh, that's nice. Good to see you, Miss Wilson. Hey, check it out, the teacher is in town. Bruley, hello everybody, Rocket Crow. Guess what happened to me yesterday? The Tadpole King had me killed off and has stolen my body and most of my spirit. I had spirit left to get reincarnated as a snail. Just enough. Oh, you're a wee snail. Lovely, lovely, excellent. Well, you're a fan of Fibonacci if you're a snail. I didn't have enough karma left to sustain ghost form. Oh, really? Yeah. His name was Bruley. It was, and now it's Bruley's reincarnated snail. Right, yeah, cool, excellent. Let's take a look at ZEC, but also what I'm going to do is I'm going to make this stream public, right? Okay, so before I do that, is there any Patreon-esque chat you want to have before we do that? So I can do any of that sort of stuff. I actually came in here intended to not do education style stuff, because I didn't want to I didn't really intend on doing that sort of stuff so much, but we've ended up doing this parabolic move stuff anyway here during an extremely bullish market. Bear in mind, by the way, this is the same as like when things are cascading to there's a downside, is that there's plenty of folk who are trying to, there's millions of folk who are trying to short this along the way, just as there are whenever something's going really is collapsing, and there's millions of folk along the way trying to long it, and what a lot of them do is provide liquidity for further shorts going against them and stuff like that. Now so there's always a case of waiting for like confirmation. If you're looking at a parabolic break, then you're looking for a big chunk of the move. So you can really afford to wait for confirmation. Front running huge moves is definitely something straight out of the greed toolkit. Okay, if you're looking to front run a move that you're scalping and you're in and out and you're taking 0.05% of a move or something like that, and it ain't nothing, then it ain't nothing, and that's cool and that's fine, and you're doing your own thing, and I'm not going to tell you if it's working for you, it's working for you. But I will say that if you're trying to front run moves where you're looking for like something, a market to move and lose 60% of its value or whatever, 70 or 80% of its value, then then don't be then we all know that that's obviously greedy, and you're probably doing things like forgetting simple stuff, and simple stuff includes, if I just make this thingy, obviously this wedge of drawn in is fairly shit. Simple stuff includes, checking small time frames for a flash up above. That would be an idea, sure. And then just the idea of trading within the range. Just trading within the range, and the range can take you down to something like 1038. You could be eagerly anticipating a move towards 998, and it not quite necessarily get there because, maybe it comes up here and then fails. That, and whatever else. Just don't forget your basics, Continue to operate on your basics and be satisfied with these moves, with the anticipation of knowing the bigger picture, so that if you did want to capitalize on a bigger picture move, where an intraday trade becomes a swing trade, becomes an investment, so on, that escalation of what's going on. Cool, do that, but be aware of the different chunks of that move. There we go, that's nice. Right, great. Popping in to say hi before I start this meditation video for my kids. Lol, have a great day, pals. See ya in a bit. See you in a bit. That was great. Thanks, man. Great stuff. I've been working on being comfortable with the middle 50% of a move. Good one, Dead Money. Really what you're saying there is that you are I know what you mean, right? You're saying you're working on being comfortable with it because you're working on being comfortable with it with the anticipation of possibly, going back, reverting to form before, and bringing this power with you as you kind of revert to type, in a sense. It's like you probably have a feeling of like how you'd prefer to trade this, you'd prefer to trade that way, but and that this is kind of outside of your comfort zone, so you're learning a skill doing it, and then this is going to help you so much, because what happens is that you're doing that in a year's time you'll be taking a trade and the markets will move and you'll be like, yeah, this is this thing. It'll go to a certain point, you'll look at the broader charts, something inside your head will say to you, take that profit at 50%, buddy, just do it, fuck it, do it now. And you'll go, I don't even know what I'm doing, and I'll take your profits. And the next thing is the markets move against you and you're like, hey, you know what, something, this worked. This worked. Damn it, what's this? That worked. So you will benefit from that. Right, great. Okay, you can do education on the fly on any stock. I love this. Yeah, man. Yeah. Cool. Okay. That's the wrong screen open. Sorry. Right, but I do need this screen. This is the right screen open. Where's this guy? Unlisted, public, done, save. Hey, excellent stuff. Right, so a notification should have just gone out to the rest of the world joining us for this live stream. I'm Rocky Outcrop, the guy who's patiently waiting. Actually, I've talked about this before, and I don't really want to be famous. It's not anything. It's never been an ambition of mine, to be perfectly honest, but the guy who's actually going to end up being incredibly famous for inventing one of the best indicators in the world ever, who's going to end up being incredibly famous for being one of the best traders in the world ever, but who doesn't care about either of those two things, because he's also going to end up being famous for being like a really nice guy, hopefully, and that's what I focus on. I want to try and do that. I want to try and always be a good guy, be good value for people in the relationships they have with me, whether it's professionally or just on a human level. And I think that is a catalyst for greater learning and greater success, and hopefully that works for you all as well. Right, good to see everybody then. Hopefully people are arriving. We've got Streamlabs, or Stream Elements bot has just popped in to say hi. Good morning, Amber. Good morning, y'all. So let's go take a look at a couple of stocks that will be open at the minute that we've been talking about recently on the show, so we can have a catch up with these guys. Oh geez, from one day to the next, like, I make a lot of points and I put a lot of drawings on things. Can be a mess. If I'd been less tired and opened up my own trading account, I would have absolutely have taken a long off of Ashford Hospitality Trust. What happened is that yesterday I was doing the TA and all this sort of stuff, and it ran on past the time that markets closed. Right, I actually stayed on the entire market, really, which meant that I wasn't able to open up my own personal trading account, which means I wasn't able to take a long off the back of this, which is okay. It's okay. It's just that I probably would have taken a long at some point here. Anyway, 1st of December, they've had the prices open at 10.70. They've moved up to $11 now. That is, of course, a move of 3.5%. But it's not about so much the quantity of the move. It's about the fact that here we are up midway into this gap, and now back down, kind of, having a little bit of a think about things. If I just flick this over to the 1-minute chart. Oh, Corey, man, thanks so much. If I just look this over the 1-minute chart, then we can kind of think about this move. Just thinking about this move, this specific move, and whether or not it's got health in it. You can see that it's a little bit extended, right? This is a discussion, a point I had in yesterday. If you include this here, you're going to end up drawing in a wedge, are you not? Let's look down below at the oscillators and see if we have divergences here just in this point, and we don't. There's the potential for this to be considered divergent here, actually between these two, right? So this is the thing, right? This point, this is the thing, right? So the left, this is the 1-minute time frame, right? So this is a bit of a bollocks to do this example on, but if I was doing it on a different time frame, then there was loads of scope to narrow it down. You could make better assertions about areas within this wedge to say what's really going on. But it's the 1-minute time frames. I don't really have that luxury, so I should probably just just accept it and say that it is a wedge. Probably it's just that looking here, it is divergent here, right? It is divergent between these points. It's just that it's only got a couple of touches, right? This is the problem here. So what you're really doing is you're forcing this last two moves to become the two top touches on a wedge. If you're using that wick and that there to force it into a wedge, otherwise you've only got two touches and it isn't fully formed out yet. Also, you're using this along the bottom side, and it's just dead flat. There isn't any this is just flat here, which is also just flat there. So we're really just in a channel in this section of it, and this part here would be divergent if it was a local high. But it is a local high, kind of almost. Well, no, it's not necessarily, right? It's not necessarily local high, because this is a low, this was a high, this was a low, and this was a high, maybe. But we need to have had this be a local high first, and it's not necessarily confirmed as having been that. Fibonacci type theory here on this one. We are below the 236 at the 382. Okay, look, you can say that's local high. It's just that this is going to look like flux along the way. It's such a shallow retrace, having only come down to 382 of this between this area here, that this is just going to look like flux along the way should we push up, and immediately you'd forget about that being bearishly divergent. It's an interesting one. It's an interesting one that's evolving right now. Why am I talking about this? Sorry, people might be wondering why I'm talking about this in any sort of great detail. It's the 1-minute time frame, and I'm talking at this in tiny detail. And it's because we're asking about this gap. Essentially, we want to see this area where we are now being sustained, and that we can actually then move up towards this next area up above, which is up here. So we've moved up into this range potentially, and we're asking questions about whether or not this thing could be considered to be inside a wedge, or whether or not this is kind of deceptive to us. And there's a few reasons why it's deceptive to us, and I think now that I've drawn on those horizontal lines, you can kind of see why it was being deceptive for us, in a sense that this phase of the market was here, and this is bringing us into a different phase of the market, and simply by sustaining it, right? That's a local high now. That's a local high now. Fuck it. That's a local high now. And that's your wedge, right? So the point being here that these wouldn't have been wedges, that you could have obviously broken out of that, and that would have been your measured move, right? So we've come down for that measured move, right? So maybe if I'd done this better, I could have said quicker and sooner. Okay, it is a wedge, as the MACD kind of forced us to say, then what's your measured move? Well, it's going to be down to here. This is pushing us down past the point of which there's the gap is started, and we need to see this then go on up to the next area. Now, if it does do this, then it's filling out a full and actual wedge. So the flatter and deceive part of this is coming into is the wedge. It's wedgeception. What's the point? It's wedgeception, right? Wedgeception. So yeah, anyway, that'll do, I suppose. Brew got killed by the tadpoles. He did indeed, Duo. Good to see you, Ben. Thanks so much again for sending me a birthday gift. That's super awesome of you. Thank you so much. I've also got one sat here in front of me from Apple. If she was to tune in, I'd show people what it is. So we'll see if she turns up. If you are here, say hello. CC, good to see you. Cynthia, good to see you. Merrick, good to see you. On him, James, Verved, Corey, Christy, Jill, Phil, Jordan, Thanks, man. Appreciate it for the birthday wishes. Merrick, Vic, Bad Mama Jama, 3D Benki, Joe Maxwell, Sal E. Mander. Good morning, good day, aloha, everyone. Good to see you, Sal. Amber, Joe, all you good people, all my favorite colors, my sisters and my brothers. Right, great. So now we've bounced off this area, right? So, really, I suppose if I'd slept more or something, I'd have been quicker to see how this could have evolved. Right, fine, whatever. We did the elasticity of that area, brought us down to here, and this is where I want to see things jump from. It's not happening so far, by the way. This is not happening so far to take us up to here. This is it's not happening so far, right? It just isn't so far. So this is a good one. This is good example. What can we look back at and see? Is there anything in the past that flash I don't think counts? Is there anything in terms of what I'm about to say? Is there anything in the past which could have given us a reason to bounce here at this area? And we could say, well, maybe this area, and this one is showing us that there was support and resistance in that zone right there. So there's that. I suppose there's that was a reason for where we could have got a bounce just there. By the way, I still do anticipate this bounce in here, even if it's getting a bit kind of, a bit frothy in that sense. Right. What else shall we take a look at? Did your camera arrive? It did indeed. Trade spawn. It did indeed. I didn't realize that the batteries, the battery pack for the constant charging in our other Sony cameras that we use is of a different size. So I'm going to need to buy new battery charging things for constant on power, so I can't actually use them. Also need to get new lenses, but it's nice to have it. Here it is, ladies and gentlemen. This is a Sony A7 III. It's a full framed mirrorless camera, which I'll be using to film my episodes with. So there you go, there you know. That I'm looking into right now is the Sony A6400. Good morning, everyone. Missed the games. We'll get them one of these times, says Phil. Yeah, they're very late games. They were late games. Traceone, that's the greatest show in the world. It is. It's the greatest show in the world. Bruley, reincarnated snail. Are you an edible snail by any chance? Oh. What's snails? Escargot. Ah. Ooh la la, les escargots. Sick camera. Cheers, Eddie. Yeah, sick camera. Got nice. It is bouncing here. Got the camera. Need to. Oh, completely forgot. Now Cyber Money's over, and there was one of the things I meant to buy. I completely forgot about it. The sort of wireless walkabout, talkie, walk and talk microphone thing, so that we can do kind of walking around, filming videos, sort of. Pro styley. So we're going to do some of that sort of stuff. I'll have to get some of them at some point. I don't think they were doing any great deals on it anyway, the thing I was looking for. Right, so what's going on here? Right, that's better. I'm looking at a picture of myself to feel how my shoulder should be. Space Monkey, good to see you. By the way, Eddie, it's really great to see you as ever, and thank you so much for being a part of that birthday message thing and all the rest of it. Knowing that there's people like yourself out there in the world is fantastic. And while we haven't chatted as much over the last few months, I've been really, sending good vibes your direction, hoping that things have been going well for you, business-wise, family, relationship, and spiritually, and everything else for you, buddy. And then seeing your face pop up during that video was great. As ever, and it's just great. It's just great and I just hope you're doing well, man. And it's nice to know that it's always nice to know that there's such great people out there in the world. What's this that I've got open? Oh, Chainlink LSD, Chainlink versus Acid here. No, it's USD. So are we going back down to 2642? Are we going back down to 2642? This is a 1 minute time frame. So we've been at highs at 2690 so far. Can we go back down to 2642? Actually, there's me talking as if that's a problem, but it really isn't. Oh, also, incidentally, there was this other flash just here. You can see I've got loads of mess on the charts. Oh, look, my internet stopped working well. It's now 3:25, so my delivery is 25 minutes late. That sucks balls. It successfully delivered your parcel 3 minutes ago. Hold on a minute. I need to go check that my parcel's not hanging around outside. Apparently it was delivered 3 minutes ago. Hold on. Eh? The gift of giving, eh? The gift of giving. Well, congratulations to one of my neighbors who's just had a delivery of all of my shit, and hopefully they deliver it to me. But if not, then it's the gift of giving. Yeah, no, it's frustrating. Okay, yeah, thanks for your patience there. Right, Jimmering Chris, let's take a look at GME. By the way, this is Link. We obviously looked at that. We filled in that flash. You know, it's really nice, right? I was doing that show yesterday. I was looking for like examples of the flash working, you know, and this is perfect, isn't it? It's perfect, isn't it? And then the theory, I was talking about this with the Patreon guys at the start. By the way, this is a stream which has been on for half an hour longer than you might realize. And if you want, you can go back at the end of this and watch the first half an hour again. It was a Patreon only stream at the start. I made it public halfway through. You can see, oops, sorry, wrong way around. You can see, using our our qualifier for if we get continuation, that this did not touch the 113 Fibonacci retracement point, and then of course bounced from here and continued on. So you see, that's the reasoning behind, just to follow through with the Patreon chat from earlier on, that's the reasoning behind this kind of this qualifier that I've put on there, you know. And boom, off we go to the races. Right, great, fantastic. Therefore, I suppose if we do drop down to 1626.42, what would we be looking at to say that we stay above? We would like to stay above 26.36. There you go. If we hit 26.35 as just a sort of brief quick thing, then there you go. That's then we may have problems. Otherwise, we're trending up here, and I like the look of the trend, right? GME, yeah. Oh, look at this, another example. So we did do this in the end. We did it in the end, or did we? Is this a different one? Oh, that's 198. Yes, we did the 198 flash. We didn't quite do it at the end of the markets yesterday, as we spoke about yesterday. You remember, this is when it closed at the end of the day. Started off the day, what did we do? Well, not only did we go up to 198, but we went right up to this horizontal line. That horizontal line, does it mean something? Let me just measure this out again, because I think maybe I drew this in like this. Is interesting. This is a 1 minute time frame on GME, GameStop, by the way. Yep, that's where the 113 is. I was not mistaken. We came up and we hit it. Now, did we do anything more than, right? So do you want to you want to like, you know, hold my feet over the coals on this in this indicator? Like I say, a man behind the curtain, here I am showing you what we're all about and trying to do this thing together. And you can see this, you can see that we didn't come up there. So this is one of those things. So why am I choosing 113 whatever else, right? Well, you know, this is it, right? I'm trying to show you this thing which there's that without actually being, you know, a scientist or a mathematician or a computer, and having, you know, thousands of examples of these things all stored in my memory banks, because I'm a human, and in fact I tend to relinquish information which isn't necessary for me to keep going, and I'm so experienced at all this sort of stuff already that I don't hold on to examples from the last year or two, and I forget what there are, blah blah blah. That it's hard for me to, it's hard, you know, I struggle to find the examples, but this is real, you know, this is in there for a reason. It was a considered thing that I did. Anyway, so far we've not had that continuation. We've got a flash down here at 195.1, even though we're pushing up the way. So at some point we will actually fail in whatever rise that we're doing at the minute. This obviously in the 1 minute time frame has got this kind of aspect to it here. So, you know, once we've come up to around about 196.50, we'll probably drop back down to 195.1, and then of course we could maybe fill out the rest of that thing. Now that would give us a good chance of getting continuation towards the top side, because of course of because it's a rising wedge, and the elasticity of this move here, having come so close to it before and then moved down the way with these, you know, with the diminishing pressure towards the downside, and the overall wedge aspect of this could lead to us, and I know that those are quite sloppy, could lead to us actually taking out that pivot point there in the markets, which could then bring us up towards our next target. Now somebody said something about 2 hours, and I didn't read the full sentence, but somebody said something about GME in 2 hour time frame, so I'm just going to take a look on the 2 hour time frame real quick and see what's happening over here. And there's you know, nothing screaming at me about this one. Let me just look up here and see if I can see that chat that came in again. Apple Blossom, you are here, awesome. Give me a second and I'll get some chatting for you here in a second here. Right. No. I don't see the chat. Jimmy says, can you screenshot, send us on DM, please, Dink? I don't think he has removed anybody. Has it been long enough for the trial to expire? Yes, that's right. Sorry, folk who didn't ask to be part of the flash in the first wee while weren't supposed to get it at all. And then I was nice, right? Anna says, you can all have it until my birthday if you just put in a message. So then a whole bunch of people came asking for it, and I gave them it until my birthday. And my birthday was yesterday, and that was a couple of weeks. And I'm sorry, but time goes by, and you know, I was actually doing that. I was doing that, you know, to be generous, you know, when other people told me not to. They said, don't do that. And stuff like that. And it wasn't like, you know, just Jamie or whatever that told me not to. Jimmy's right there right now, and he isn't even fully aware, right? It was other people from within the community that told me not to do that. So you know, there you go. But I did it anyway, right? I did it anyway. And yeah, for some people that trial's run out of the thing. I'm sorry if it wasn't able to give you, you know, if you weren't able to kind of extract enough value out of it to feel like, you know, that you want to pay for the thing. Right, so yeah, right, what was the other chat here? There's some other chat. There was some other chat that I thought, yeah, I was still looking for that 2 hour thing, but I can't see it. Wait, y'all spot the new Gartley on the GME 2 hour? There is Salamander saying it. So is it this dude that you're talking about? Is this is higher than that, but then that's lower. Yes, cool, nice one, nice little dynamic here, right, Sal? Because of the sort of hidden aspect of this, right? You know, it's harder to see because this C point would be higher than this point, but yeah, up to AXA down here to the somewhere in around there, right? And then up to the C point down there, and then down to here. 786. Well, we could push a little bit further. I mean, my measurements are not necessarily accurate enough right here, right now, are they? Where does that take us down to? Mid 80s. So mid 180s. So yeah, great, cool, 180. That's one of those targets that we've talked about. Could we have that come in? Well, we certainly have had the chat about how we could retrace 90% of a move after a flash has occurred already on the charts as well today, during the show, and I explained that and looked into it and gave an example. And there is a flash on here somewhere, wherever it is, I don't know. Down there at 171.50. It's not jumping out at me right now, but there's one kicking around about here. It's this inflection in here caused it. So I imagine, or was it here? It was this movement here. This inflection here left us with this equilibrium, and this equilibrium here is liable to be satisfied yet again. So if we were to push on down past that, it would still be within the tolerance of a Gartley move, by the way, because you know you actually would only kind of stop out of a Gartley trade once you took out the X point, which would be the prices dropping down below 166. And I think that makes a lot of sense to me as well, you know, just purely from a forget harmonics, you know, and just think about this in terms of where your last lows were and looking over to the left, right? So suddenly this, which was just one wick touch, becomes another touch, and looking over here becomes resistance. So what is that? Well, that's a clear pivot point in the markets, isn't it? And that is so there you go. Hey, nice one, jolly good. Right, cool. Hey, Christy Callahan, thanks, bud. All good. No snow here yet. Sal, you know what? I goddamn miss you, Sal. I miss you, Sal. You knew I would. I'm sure you would. I'm sure you knew it. And you know how much I goddamn love you. Oh yes, Apple. You here? Apple, you came in. You said hello, like good morning, and it's like you left. But this pink envelope, right? This pink envelope arrived through my door this morning, and I was like, what the earth is this? What on earth is this? I haven't only gone to bed at like went to bed at whatever time, but I was still awake when you were texting me at the end of the show, Jamie, Tradpool Game. So I only slept from about 7 a.m. until about thank you, till about 10 a.m. When this thing came through the door. And it's stickers, nice little stickers in there, cute little things, a kind of bookmark thing there, a little thing, a note which says happy birthday, now your stickers have a home, from Kellen, and then this handmade little book thing which is cool because it's like how Sauced Food Cart had suggested to me to get a book for taking notes in during the show, and now I have one, and it's got a nice kind of watercolor picture on the front of it. It's really quite a pretty watercolor picture on the front of it, a pretty picture on the back of it, and it's a nice glossy notebook inside. Thank you so much for sending that to me. That's really kind of you. It's really kind of you. It's really kind of you, and I've been so completely blown away by the love that people have shown me over the last day, and I appreciate it a lot. So thanks so much. YouTube is hiding my jar of beer again. Damn it, TradeSpawn. Why is that happening? Why is that happening? That's me. That's what's up with that? That's weird. Yeah. All right. Okay. Weird. All right. But seems many seem in file. What's Merrick saying here? I always feel it's necessary to pay full price when familiars are running their own businesses, but seems many feel entitled to a discount, which always confuzzles me. Yeah. Right. You know, it's kind of like it's like that. Yeah. I agree. I agree. I agree. I agree, and I do agree. And yeah, I agree. And yeah, I agree. I do agree. Yeah. Yeah. But also as well, I have to say that I've had people who've been so incredibly kind to me over the years, and when that happens, it's nice to be able to have the opportunity to pay them back, you know, in kind. Right, so yeah, you're paying the full price one way or the other, right? At least, right? That's for stickers. You can put all your stickers. Oh, right, it's for stickers. Oh, that's cool. I get it. I just thought you were like, there's a. That's cool. I thought that you just meant like there's somewhere you can stick stickers, like, you know, in the same sort of ways I say to people, stick them up your bum, or whatever. But actually, no, it's a thing that I can put stickers in, which means that I can get Merrick's stickers, which I've left somewhere within 10 feet of me here, but I'm not entirely sure where I put them. Merrick manifest density stickers, and pop them in as well, and put other stickers in there too along the way. That's so cool. That's cool. I've never actually had a sticker album before, and that's great. That's so cool. That's so cool. Jamie and I, when we were at university, ran a business, and then kind of whatever. Which was a free sheet magazine, glossy, really high GSM, 250 GSM glossy magazine, free, that we distributed around the city here, and we and a nightclub photography website and social thing and everything like that. It's big it was a big deal. It's like really big in the city, and we called it Flash. So it's really nice that there's that I get to use the Rocky Outcrop Flash. You know, I was thinking about this the other day. Is that it's Flash? You know, it's like how many years of my life have I spent kind of talking about Flash, and it's just so goddamn many, and it's so nice. I never really thought about that before, but turns out Flash is like one of our things. Right, anyway, manifest stickers are on my computer already. That's cool. Merrick Sanders, good morning. Yeah, I don't have them on my computer, but I just checked there. It goes, I want to borrow some of my beer. You do have quite a bit. Magazine. Sign up for a Rocky School to become a better trader. Thanks, Christy, man. You're sharing my links. I love this. Tell you what, if I just go pin here. Perfect. Brilliant. So yeah, thanks for that. That's really cool. The reason I was talking about this is because we had Flash Edinburgh stickers, right? And I would love sticking them around the place. Everybody loves stickers. Everybody loves a sticker. Oh my goodness, people go mad for stickers, right? So you'd be taking a photograph of somebody in a nightclub, and women would come up to you like, "Oh, put stickers on here" and stuff like that. You know, all sorts of stuff. You know, it's like it would be any other situation, completely inappropriate, but you've got a sticker. People go mad for stickers. What is that? I don't know. Anyway, I go mad for stickers too, and we would stick them all around the place, stick them about town and stuff like that. And there's a particular set of steps in Edinburgh, which is on a street called Guthrie Street, which has got which is you know, it's very old set of steps, hundreds of years old, and they're made from stone. They're proper stone steps, except so many thousands of people have walked on them so many millions of times that they're all bowed, you know, where they've been worn away and eroded by the passage of time and stuff like that. One of my favorite little bits of steps in Edinburgh. And anyway, on that set of steps, there's a set of banisters run up the middle of them, and we took the sticker back in the day, and we stuck our Flash Edinburgh stickers on those banisters, and then they were there for years and years and years and years afterwards. And then when they eventually did wear away, the metal behind was less damaged than the rest of it. You could get this image of a sticker, and I've walked past that maybe 100,000 times in my life and stuff like that. So stickers mean a lot to me. Where to stick stickers means a lot to me, and I've never had a place for sticking stickers before, and I don't even know if I've got any of those old flash stickers left. And now, like, seeing that there's be a place to keep stickers at, that's kind of cool, because then you might have them in the future. So little bounce just there. Let's just look down here, the 15-minute time frame, 5-minute, wait, was the 1-minute time frame, the 1-minute time frame, where was that one at? Yep, so we're going to just go up here and just like tick off this thing at 195 and 20 cents before we ditch down. Did I already talk about this dropping down a bit as well? Did we drop in and fill in another flash already? Where was that other flash at that I had on? I don't know, whatever. So at this stage, what we're looking for is whether or not we'll go up and fill in this 212 flash. Now, I do think that we will, but it's a question of whether or not we go down to kind of, to that 171 flash first, or not. And maybe we don't do. Maybe we don't do either. No. So yeah. Right. Anybody want me to take a look at anything in particular, by the way? Then let me know. Okay, I got some from him, but put them up about 10 years ago outside. They still up to this day. I got some from him. From who? From who? My homie owns a sticker company, if you're only the Good Connect. Oh, that's cool, man. And they're outside, and they're still up. Wow, quality. I stick stickers on my wall with push pins so they last forever, says Space Monkey. That's so cool. Space Monkey, I think you asked me something in Discord or somewhere, and my memory is so like frazzled at the minute that I can't remember what it was. I'll get back to you at some point. I don't mean to be ignoring you at all. I meant to already, just forgot what you said. Rolls Royce. Okay, cool, nice one. RR dot. So here's Rolls Royce. Did I say that wrong? RR dot. Rolls Royce. Oh, and a bit of a range just here. Wait a minute. This is the 5-minute time frame. So we've got another. We've got another female anatomy diagram here. The alternative name for the inverse head and shoulders is, of course, you've got your ovaries up here, you've got your fallopian tubes here, you've got your uterus here, right? So it's the inverse head and shoulders, but nobody calls it that because that's far too. That's what, Rocky? You're a weirdo. Why would you even say that? Why would I even say that? Right, yeah. That's an unusual kind of thing, right? So it's a head and shoulders which had a lead up to it, which is kind of wrong. But the fact of the matter is that actually, we had downward price action. This could operate as a head and shoulders. This is just obviously not connected up. So it could operate as one. We just need to kind of push past certain zones. This is actually has come down to the 1618 Fibonacci retracement point, by the way. We pushed a little bit past it, as you can see, but this was all during that volatility of those moves. So we've kind of done what we needed to do off the back of Thanks, Christy, man. I'll check that in a sec. We've done kind of what we needed to do off the back of whatever the feck it was where I drew that in at. So it's kind of can't see anything right now. So this is too small a time frame for me to see. There's not enough on here. Now, why would I want to bring up the bigger time frame? Why would I want to do that? It's not as that as people say, when in doubt, zoom out. This me zooming out isn't something to do with doubt. People literally only really say that because it rhymes. Okay, I think it's probably worth pointing it out. Now, things that rhyme are obviously true. One of the fundamental things behind the English language. is that we specifically had this worked out millennia ago, that the that, you know, if it rhymes, it's true. That's why all the words. That's why those words rhyme. You know, we chose them like that. Anyway, beyond that, that there isn't really any other reason why people say it. But if you look, well, the reason why I zoom out is because trend is important, right? Now, even though this is a stock I've looked at a whole bunch of times, and I'm aware of the trend on the big time frame, like say the 24-hour time frame here. I'm aware that we had a big drop down and that we're looking at this inverted head and shoulders, this other female anatomy here, and that we're looking to push up above the 120, 130 area to get up and all the rest of it. You making fun of me? I'm not making fun of you if that's what you're saying. Wait, did you also call it one of them? Because that's funny if you did. Yeah. Jordan, you want to send the thing? You're in the UK. If you're in the UK, the PO box address is super easy to use. If you're not in the UK, you need to make sure that you tell them when you're posting it to send it using Royal Mail. Parcel Force and all the rest of them can't actually deliver to the PO box address. It's very, 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 very incredibly mind-blowingly annoying. And the but yeah, Jamie will probably help you out with that shortly. If not, then I'll get it and give it to you, no problem. Yeah, so I zoomed out so I could see the trend, right? And I'm aware of this, right? So the trend was down and then it's been sideways ever since. I'm aware of the fact that it's sideways, right? And that's on the 24-hour time frame. And on the 5-minute time frame, I'm aware of the fact that the prices have dropped down here and that they came down here from some downward movement. But this is, you know, this is obviously been downward trending on the 5 minutes, and then looking back, going back, you know, this was like, you know, what's happening here. Now I know from the broad perspective that it's been sideways in the last wee while, and I know from the and I know all these things, but I need to see the context of what we've got going on here on a with more, it's just a bigger information. It's what, you know, it's to look at it. It's not just that. The reason I'm telling people this is because I want them to know that zooming out isn't just something that you do when you're in doubt. It's like study the market, look at them, do technical analysis. Don't rely on just one time frame. Yes, trade on one time frame with the expectation of how you're going to manage, enter, exit your trade, etc. However, look across all time frames and understand where the market is in relation to them, and do the work, and don't be lazy. Right, that sort of thing. So yeah, so I know that it's a sideways idea. Yeah, I knew that this was down, but I need to see like where we are, the trend, the range that we're operating in, how far we've come, where it all lines up with, etc., and be able to kind of measure it out and all that, just to see where we are. And I can now see, having done that, that this area here where the dip came down to was bang on into the 618 golden pocket, right? Perfect, excellent. So done it, right? Now we have this kind of little range that we can operate within. If we take out our wick down here, we're obviously picking out a golden pocket, looking to move down a chunk more, or whatever. If we take out the top side here, then we're taking out the neckline of our head and shoulders. It's also where a gap is, and the gap is also, you know, if we just measure instead from the gap down to the end of the gap, right, just first off, and then use that and go down here, look, oh, lo and behold, the gap is the same size as the measured move of the head and shoulders, right? So I've talked about a theme for quite a while now on the show over the last few months, and it's a theme which you'll have never heard anybody else who does technical analysis ever talk about, right? Because and look, when I say these things, it sounds like it sounds really big-headed and stuff like that. It's just that I've been doing technical analysis for years and years and years and years. I've studied economics, and I'm also interested in various things, and I also don't glass ceiling my own learning, and I try to continue, and I think that I'll keep learning until the very day that I die about all of this. You know, and that the best I can ever hope to do is to continually tell people about the new things I'm doing and everything else, and to reaffirm the knowledge that I've got over time, because it'll never stop evolving and all the rest of it. Anyway, one of these things. So it really isn't about arrogance. Really don't want to come across like that, but I do want to point out that this is something that's fairly unique to this channel, and it's to do with price elasticity. I keep talking about it all the time, right? For the last few months, you must have noticed And where else do you see this happening at this concept? And why am I talking about it all the time? And it's because, and hopefully now you get to see, how this is a thing, like how this is a thing. It's like an actual thing, and it's not me that invented it. The elasticity of price. Here's over on Investopedia, right? Elasticity is a measure of variable sensitives, is a measure of a variable's sensitivity to a change in another variable. Most commonly, this sensitivity is the change in quantity demanded relative to changes in other factors such as price. Oh my God! Did you actually hire did you hire a social media expert to write your economic stuff? Honestly, elasticity is obviously to a change in another variable. There's two fucking variables, by the way, right? It's supply and demand. It's the basis of economics, right? It's the another variable. What's it today? What's the variable today? Yesterday it was supply. Tomorrow it's going to be demand. But today's variable is cheese. No, cheese isn't one of the variables. There's two variables, right? Anyway, so this isn't something that I've invented and obviously it's from the world of investment, it's from the world of economics, etc. But who else out there in the world that does technical analysis talks about how the ranges are the expression of the price elasticity, and that the elasticity is expressed within the patterns, that the elasticity of the patterns is expressed within the Fibonacci? Who else talks about that? Who else out there says all roads lead to Rome? And what about price itself then? What is price itself? And this is the fundamental understanding that you all need to have, that price is an ever-evolving, changing concept, which is really just a snapshot of the relationship between supply and demand, and that is the point at which supply and demand cross over to find the price point at which people are most satisfied with the product. Now, if the most sales will occur in, where the volume will be where people are actually willing to buy and sell, and the elasticity here of this thing, as expressed in this range here, is, as we've seen down below, is of no coincidence that it's the same as the gap. It's not a coincidence. This is a fundamental nature rule that exists, like the laws of physics and like gravity and like everything else. This is how this works, and there is no other way of saying how this works. This is the way that it works. This is the way that we decided that it worked thousands and thousands and thousands and thousands of years ago, and actually maybe not even us, maybe just nature itself. And that this is the cornerstone of understanding price, and price is what this is, and this is a price chart. So this is the fundamental thing that you've got to understand, that you don't understand, then you're just like everybody else, okay? And if you're just like everybody else, then like, how many traders lose all their money? Let's see. Forex, a study by US Securities and Exchange Commission of Forex traders found 70% of traders lose money every quarter on average, and the traders typically lose 100% of their money within 12 months. Well, why the fuck do you think that is? Nobody understands this. Who understands it? Who understands it? Well, I'll give you a clue. Typically, traders typically lose. No one understands it, which is why nobody talks about it, despite the fact that it's here on Investopedia. Why? Well, let's see how elasticity works. When the value of elasticity is greater than 1, it suggests that the demand for a good or service is more proportionally affected by the change in its price. A value that is less than 1 suggests that the demand is relatively insensitive to price, or inelastic. Inelastic means that when price goes up, consumers' buying habits stay about the same, and when the price goes down, consumer buying habits also remain unchanged. If elasticity equals 0, then it's said to be perfectly inelastic. Right? See what I mean? Immediately it's gone back into the economic theory and proven to you that while they're capable of finding a textbook and copying and pasting it, they're incapable themselves of understanding it. They don't understand income elasticity, cross elasticity, price elasticity of supply. The price elasticity of supply measures the responsiveness to the supply of a good or service after a change in its market price. According to basic economic theory, the supply of a good will increase when its price rises. Conversely, the supply of a good will decrease when its price decreases. that's the economic theory from the point of view of when you go into a baker and you're trying to buy a loaf of bread, and he only makes 10 loaves of bread a day and 100 people want them, then the price goes up, and then he starts making 200 loaves of bread a day and still when only 100 people want them, the price drops down. That's what that's explaining to you. But look at the charts. This is everything. This is everything. This is everything. This is the why. This is the why. Anyway, that's important. Right, sound. Banana fridge. I've never had it, but it seems like it's not cheese. Right. Anyway, doesn't you know? We're done with that, right? We're done with that. We're done with that. Right. So I'm now not going to bring that up again so much for a while. I've kind of gone a bit mental on that one. Let's take a look at some forex, shall we? Here's USD JPY. What do we have on the go here? We're back down at our support zone. We did have that bearish divergence. Yep, cool. Okay, I don't actually know how long this has been going since I did this TA last night. Actually, right? I did this last night. So instead of that, let's still take a look at something else. Euro dollar, right? USD, Euro USD. This is the most popular one in the world. Now you could be USD to the dollar, except it's the price of euros in dollars, right? And now one of the reasons why this is the most popular one in the world and why people talk about Euro dollar so much is the same sort of way as why, you know, when you think about it. This is the Bitcoin price, Bitcoin dollar. This is Bitcoin dollar. It's kind of like a forex pairing, and it's because it shows you the price of euros in USD, right? So this here on the left, when it says 1.13, that's the price of a euro if you've got dollars and you want to buy a euro with a dollar. So you go in and you've got $1.13 exactly, or whatever. You're able to buy 1 euro, right? That's the way that works, and that's what we're going on the go. We're at 1.13 in terms of that. I wonder, you know, wonder if that's significant or not. So anyway, as you can see, this has been trending down quite hard for a while. What's the reason for it? Oh, let's just look. There was this on the go. We came up, we retested the area, and then we broke down the way. Am I actually going to do this for the measure move? I think I probably will, even though it's obviously further than it. So so we've gone down a little bit further. This is, yeah, cool. Anyway, this is interesting. So from the lows to the high, where have we been? Lows to high. Boom, in a 618 golden pocket. Where is this? What is this? This is a nice little knot in the price action along the way up. Resistance, support here, very, very good. See if we need to consolidate here for a wee while, not a problem. Taking this area out is a problem, right? Moving up the way afterwards is probably to be anticipated within the overall structure of the range. If we do find, finding support here, otherwise it could be a problem. This, oh, we filled that in. We've still not done this one. Interesting. So, oh, big volume came in here with that movement up. The volume has been diminishing slightly, but, you know, compared to when it was back at these levels last time, it still remains higher where it is right now. So, you know, you would expect demand to increase as price falls. Price has fallen here. Demand wasn't increasing. The supply of a good will decrease when its price decreases. That's the supply. Where's price? Demand. Yeah, the good is so price elasticity of demand is economic measure. Why did they not explain this the same way? I mean, it's obviously the inverse of the other one. I don't know why they didn't. I don't know why they didn't explain it in the same way. Obviously, then as it's the same thing. As price drops, you know, demand is whatever. Anyway, it doesn't matter. Price has dropped, which means that either demand or supply dropped. So that's the actual reality of it. So I was explaining that wrong. It's a complex construct, but price is an outcome, right? Price is an outcome from things. So what is the price of something is like saying what is the hydration of a human, or what is the length of a piece of string. It's really quite arbitrary what the price of anything is. The price of something is always changing. But we're convinced otherwise because, you know, you go into the shop to buy a pint of milk and it stays the same price from one day to the next for quite a while, or the price of a can of Coca-Cola stays the same or whatever. Now, when price changes, what it means is that there's been a change within either the supply or the demand of something. And supply obviously means then in sense that people are selling it in terms of price charts and economics and how this works. So people are selling it, whereas this is going on. There's not been an increase in the demand while people have been selling it. So as the volume drops down, as the price drops down, then it means that there is not an increase in the supply side, because for every supply there is a demand, and for every demand there is a supply, because for every buy there's a sale, and for every sale there's a buy on charts. Right? Don't be too sort of distracted by the GME and the short squeeze and all that chat. For every buy, there's a sell, and for every sell, there's a buy. And there is with GME too. It's just whether or not they're synthetic or not. That's the debate. And so, you know, here, as we can see here, there's been less volume. So there's less supply on the go, and there's less demand as well at the same time. All of that as the prices are going down. And then here, there's a whole load more of supply and demand in at this point here. And then the prices then went up thereafter as it happens. That's enough of that chat. That second one didn't fully complete and then made a new third one. Ooh. Trey still used his phone to take trays, but did TA a computer when he felt like he was being more serious. Who's that? Who are you talking about? Good to have some buffer between training and charting. This time last year or so, a chap in chat had joined TradingView to look at charts on his computer. Until then, he'd only ever traded on his phone. That's not just one person. There's plenty of them. You know, you could actually say the exact same thing, for example, about Corey Bing Bong. For example, Corey, have you got a computer? Are you trading? Have you got a computer yet, man? Or a bigger screen? Rock Outcrop, tell us more about price elasticity. I hope was that sarcastic? I don't know. If you have time, you could check out Tesla. I have time. Let's check out Tesla. I was only looking at this because I was just like, because nobody had asked me for anything. Oh shit. Kirsty had. Sorry, back up a wee bit. I was ignoring my super chats. Sorry about that. So got Polygon of you trade spotting. Here's some of it back. Oh man, thanks so much. Jeffrey Champlain. The Mortal Cachito. Oh, you're mortal after all. Sorry I missed you yesterday. Happy birthday. Happy birthday to you too, Cachito, man. I say that all the time when people say happy birthday to me. It's impulsive. A wee look at PCT for the legend that is D. Yes, man. Thanks. And Christy, that's very kind of you. Right, PCT. Let's go take a look at PCT. Oh, here we are. Pure Cycle Technologies. Pure Cycle. It's the purest of cycles. Cool. So this 24-hour flash got filled in. It lined up with that previous one. I don't know when the last time we were looking at this is. And I can see by the drawings that it was obviously after that had happened. But so where we've come to so far is above the 236. We've not managed to make it up above the 382, the 158. Why is this Fibonacci got the wrong? Anyway, whatever. We're up above the 236. We've come back down, found support at it so far. This was a dip outside of what would otherwise have been a range, and obviously has come in with came in without any bullish divergence on that front, unless you go all the way back to here. All right, between these 2 points. Oh, good to have left that on there. This is the flux along the way down. Yeah, cool. Okay, great. Okay, so all-time lows came in with a good dose of bullish divergence. Now, you would expect that at all-time lows as well as it happens, but so we're looking to see if this can recover. So far, we've made it back up above the 236. From the broader perspective, we're back into this potential sideways range, you know, so just kind of from the broader perspective, we're back into this sort of like this idea. And that's a good thing. Now, from this broader perspective, there isn't an awful lot more for us to learn. It's worth pointing out that this is a downtrend. And it's worth pointing out that as a result of these highs having not moved up that much higher relative to the lows and how they moved down, that this has got a tightening ranges on it throughout. So we've got effectively a wedge type structure here. Now, this isn't drawn in perfectly at all, not even close to it. It's worth pointing out that that's where it is, and that would be a positive thing in terms of the macro. This is taken in most of its lifetime as well, and going back over the period of most of this year. It's not a massively old stock. So that's where we are right now. So, I mean, are we up towards the top end of that? I guess is the one question with regards to it. So let me bring up the charts full screen so I can actually see what I'm looking at. And ding. So we are up towards the top end of this. and this is the lower end. So really, you know, pushing past these zones does become quite important. Now, right, so pushing past these zones does become quite important. We could, of course, kind of move outside of this just sideways and continue, kind of kangaroo it for a while before we get exhaustion one way or the other. You know, it's like you can, in that sense, that you can, of course, trade within a pattern or a range or whatever. No, trade within a pattern, and then you're looking for a breakout, or you're looking for a break of a trend, or you're looking for a reversal, or you're looking for whatever. And you know, when you don't get like necessarily a great big bottom in formation, sometimes then you're looking for just kind of exhaustion in a sense, right? And that's another way that you can get a reversal in a market, is just through exhaustion, seller exhaustion in a sense, right? So going sideways like this is fine, because seller exhaustion means that while people have been selling, people have been buying. And the general thesis in terms of how all roads lead to Rome is that while it won't look like typical kind of accumulation patterns, that evidently over a long period of time, this constantly being buying bought up to certain areas, it represents accumulation. So what you need to do if you want to accumulate against people is to cause a good deal of fear. Good chance to do that when you're in all-time lows. Doesn't mean that we can't go back there again though as well if that was happening. Big volume in here at this point of that low, and that is significant. Yeah, it is significant volume. This is significant volume. This is significant volume, and this was in a sense kind of like the starting volume of the downtrend. This was up at a high, and you could have made whatever type of kind of assertions about that. Then there's a starting volume of the downtrend. So this potentially here could potentially be stopping volume. Could that be start? And could that be stop? Could it be? If we were to go for a full range move of this thing, it's insane because it's basically the whole thing. So what would be the way to do this? What would be a good way to do this? Well, a good way to do it, for instance, is simply to look towards the 618 golden pocket right now, as opposed to as opposed to like anything else. Just to kind of look towards this and say that if we were to start to push outside of this zone, maybe up here towards the $18 would be our first sort of big target. The other thing about it is then there is the move itself, which obviously can take you up to our highs. This is no surprise, you know, that this is it's easy to see that if the breakout territory, if we're doing this accumulation thing here, right, and the breakout territory comes in at this point here, then obviously the full range only takes you back up to where you left it before, so you didn't even really need to use the measuring stick on that front. The other thing about this is obviously this looks like a descending triangle when it's like this, that had this breakout from it down to that area, but I prefer to look at it as the wedge. I'm just making a point with regards to overall accumulation in this territory. If we were to go sideways, remaining above the 236 while remaining below the 382 as a you know, without trending, is essentially what I was trying to make the point about there. So this should still obviously be stopping volume and the trend not necessarily initiate straight away. So anyway, that's all on the broad term time frame. So let's look down at a smaller term time frame. What are we doing in terms of time here? 10 past 4. I'm tuning out in 15 minutes, people. If you want me to take a look at anything else or any of that sort of stuff, be sure to get your chat in within the next 15 minutes, right? Because that'll put me through to 25 past 4, and then I'll tune out. And honestly, 25 past 4 my time. I didn't go to bed until I didn't go to sleep until after 7 a.m. this morning. Awake from like 10 a.m. now, and I don't even know. I don't even know. Like, this is the sort of shit that gives you cancer. So, right. So, yeah. Right, so didn't break into the bearish control zone again after having broken into the bullish control zone. Nice little change of characteristics in here. Nice resurgence, nice kind of carrying on with that stopping volume. Good stuff. I want to be bullish on this. I want to be bullish on this for a potential turnaround. We are acknowledging that the highs are there. We're acknowledging the highs are there, that there's that resistance up above. We have to acknowledge that. That's a real thing. This is really, you know, this is a real thing. It's really happening. There are these there is that downward sloping supply line. There's this on the go at the minute, by the way, which you know, this is again another example of these kind of like crappy wedges, but it's worked for us, but also could just be a different wedge, right? And this is obviously fake out territory. So then if we go down here, then we go up then from that point afterwards, that would actually give us more touches. But you know, this is where we are with this one. We could be looking for this type of a move, in which case that's from there to there, which is roughly back up again, obviously to our highs. Again, I didn't really need to do that. If I'd remembered what I just told everybody, that if your breakout point on your wedge is at the same level as where you started off drawing it in from, in that way, in the same way as whenever I was talking about this, the descending triangle and stuff like that, then evidently, you know, it's quite likely that it's going to be just taking you back to your highs as before. So yeah, we've got that. Is there any point in investigating this down here? Like, yeah, it's not bullishly divergent or whatever. It's more a case of whether or not we can sustain outside of the bearish control zone. Now we've come back up again and we're testing at the top end. Yeah, this is the period. You know, if we get continuation, we could break out. Yeah, no problem, thanks man. Then we'll break out, and if we don't, then we'll trade sideways, right? Trading sideways. So this is this is kind of the critical path analysis more than anything, right? If we go up the way, then you know that you can follow that should we see momentum. If we actually break into the bearish control zone, then maybe, you know, we actually try a little bit down the way, and we could you know, investigate one of these lower areas again and continue on with what has obviously been a downward trend, and we're not ignoring the fact that there's a downward trend on the go, blah blah blah. And then obviously, though, what we could do is we could find ourselves operating outside of this territory, moving a little bit sideways, and kind of that could happen if we actually do turn around here at this point. And the stochastic's pointing up really nicely, open interest increasing here along the way, as well as you might expect. Cool, excellent stuff. We actually haven't managed to break into the negative zone on that in a while as well. Yeah, so it feels quite good. It feels decent at some point for a turnaround on this one. To say that we're guaranteed to get one would obviously be preposterous, but if we wanted to, we're right there at the cusp of where we could have things happen for us. We just need to see them kind of get that follow through in terms of positivity, you know, and we have most recently been and the 4 hour time frame most recently been bearish. So while the 1 hour time frame, as a result, right, so what's happened here is on the 4 hour time frame, this made us bearish. Here, we made us bearish. Then on the 1 hour time frame, we've been bullish, but we've been bullish since this happened. On the 1 hour time frame, it's been since this happened we got to being bullish. This happened after the low. It happened with this rise up. That's what pushed us up into bullish territory. So the 4 hour time frame remains bearish, right? It didn't actually get to become bullish. It remains bearish. So this is why, you know, we have to be cautious that there could very easily be more lows. Even lower lows could very easily happen because we remain bearish. It's just that there's fuck all strength of trend at the minute, and you know we're seeing chopping around here. We want to see the ADX actually start to move around, and the ADX to start to move around is going to take us moving outside of the outside of our ranges, etc., moving outside of them, you know. So this chat here where we're seeing that the prices are doing this is just sucking away all of the strength of the trend, right? All of it. Yeah, there'll be movements like we can see with these areas, but it's just like not giving you, like, the ADX is just on down. Oh, we got a bit, you know, oh, we got a bit of movement. Oh, we did something. Not enough. So you see, every time it's got to the point where we could potentially be having a strength of a trend, it's failed. Why? Because we've never managed to actually trend. We've never actually managed to trend. And then we just slink back down and we go lower again. So we haven't had a change in conditions yet on our bigger time frames. Everything is shit everywhere from 1 hour and above on this one. But, you know, things could kick off. And here we are in the 15-minute time frame. We've obviously seen a nice big rise up. The ADX has come up here high. The DM's positives high. You know, typically you would expect to see a turnaround here. When I say bullish on this, it's like, I think what I mean by bullish is that we can be ready to become bullish on this, and we can be ready to take advantage of any moves that happen in a bullish way, but we can also remain bearish on this because we are aware of the trend, we recognize the trend, and we know that the larger time frames still haven't managed to change the conditions on them, and those conditions are, of course, what we're going to base our decisions on. cool. Is AVPT ready for a turnaround? We could take a look at that possibly, but I've got a request in here first. Right, cool, nice one, BMJ. Thank you. Can you take a look at Piton? So what we're going to do here for the rest of the show is look at Piton, then we're going to look at Hexo, then we'll take a look at Bitcoin and Tezos if you've got the time. Hope you had a good day, and thanks so much for the Tezos from Not Your Dad. Thanks so much. That actually isn't my dad, because my dad doesn't I don't think my dad's got Tezos to send me. Congrats, D, you put time in on it. Where's D? I'm now nicely in the green. Great, D. Come on, PCD, do a little bit of recycling. Yeah, man, do some fucking recycling. Earn some money, PCT. I'm really glad you're on the green on that one, man. Oh, Marantz Rants. Here's Marantz Rants. Birthday week shout out. Enjoy the week, brother. Marantz Rants. He's another YouTuber. He's a very passionate dude, right? Really passionate dude on GME, right? GameStop. Very passionate dude for GameStop, right? So if you're really passionate about GameStop and looking for somebody who's also passionate about GameStop, there you have it. Marantz Rants. And he's also, you know, quite accessible, and he's there on the YouTube, and you can go and you can chat to him in his chat box and everything else like that, and he'll read your messages and talk back to you. You know, he's there, he's live, he's proactive, and he's engaged with his audience. Okay, so just a little shout out to that guy. Hope you're having a good day, my buddy. Hey, cool, nice one, mate. Right, so yeah, what was that again? Yeah, so the things we're going to do: PTOT or something like that, something like that, Hexo, Bitcoin, and then if we have time at the end, I'll try and take a look if AVPT has a turnaround on it, right? Potential, right? Okay, so first one, PTON. What's Peloton? Oh, Peloton. It's been a while. Hiya, Peloton. 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 Peloton, 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 Peloton. Peloton. Sorry. This thing's doesn't seem to be as popular. You know, so while AHT crashes because of Omicron news, and it's a hotel business, and Peloton was a darling of the previous C word things that you're not supposed to say on the YouTubes. Then anyway, it was a darling of it, and it's done crap. And then even with this most recent sort of Omicron news and whatnot, it's still not managed to recover any. It's not like everyone's like, oh right, yeah, Peloton stock, it's going to fly up here. Instead, it's not. Also, kind of Peloton, you know, one of these sorts of things, like, great idea. I'll feel like I'm cycling inside a house with a bunch of other people, online thing and whatever else, and that, and then they capture everybody that ever wanted to do that, and then their market's fairly saturated in terms of early adopters, right? So it's kind of like now it's a case of all those early adopters haven't been there for a while telling everybody else. I mean, you can think about this in terms of my YouTube channel, right? I started off here and I was going along and I had, like, you know, growth, sure, but it only really got to, like, you know, I got 6,000 in the first 6 months, and then I got 1,000 in the first 6 months. That's what happens if you don't, you know, do any cheating stuff or anything else like that. Of course, I could have 500,000 subscribers right now if I'd bought them, and then you get a big dump down, whatever. Sorry. Then I had another 1,000 in the second 6 months, despite the fact that I started doing live shows all the time and up the content and whatever else. So, you know, I only got 1,000 in the second 6 months, right? And then a few months went by, and my subscribers went from 2,000 to 10,000, right? And then some time went by here, and my subscribers went from 10,000 to around 11,000, and then actually it turned out that those were fake, and it dropped down a bit. Oh, they were fake. But then people must have felt sorry for me. The subscribers went up a bit, and then, you know, they went up, and it thought, actually, you know, thought that we're going to go up, and we had been told that we're going up to 13,000 and all the rest of it by YouTube there. But actually, YouTube then removed them all. I mean, you know, so we weren't at 13,000, and I logged back in the day after my birthday. So on my birthday, I went up to from 11,800 to 13,800. I logged back in the day after my birthday, and where are we? We're back down at 11,000 again already. And what we really need, in a sense, is, you know, for all the people who were the very early ones that came on who are like, yes, you know, I like the idea of cycling in this room and whatever else, as is with Peloton, or indeed as it is here with everybody else. Yes, I am engaged in my own freedom. Yes, I am going to take the time to, you know, control my own destiny. Yes, I'll develop a skill for life, etc. And then you've got all the other people out there who don't know that it's great yet, and it has to shrink back down. And at some point, then we're going to need to have like a second wave of people coming along here who are interested for some other reason, who then, you know, join in on the whole health kick thing as well. So that's where we are with this one. Anyway, this will probably be 618. Yes, it is, and it dipped into the 618 golden pocket over there. Great target to have. What's nice is to see that as a result of this drawing in the 618, my eyeballs actually got alerted to the fact that in here there was a gap. So filling in the 618 golden pocket actually lines up perfectly with that gap that was there. Now this gap has already been filled in, but it's just kind of nice to have seen that lines up with where that gap was as it happens. If we were to then make it down below that area, then what it means is that, and I'll just chuck all this in the crap in the bin, if we were to make it down below this gap area, i.e. below where we are right now, i.e. below the 618 golden pocket, it means that we've got 1, 2, 3, the areas of, you know, what we're like, this support here is then broken, and we're back down into the whole this area of the prices, right? Which is not great. Obviously it's negative, and looking at this, it's like the range down here, well, where I think we could expect to go to would naturally be, of course, to the range down here again, you know. So we would do this again, we do this again, and we would do this again here at this point. Okay, so if you are looking for this move here, then you could maybe trade between 35 and 27. That's an opportunity for people, I think. There are 35 and 38 or 28. You know, so there's that opportunity. If you're looking to take a bounce off the back of this here to see that, can we get up the way a little bit, then cool. That's true, that's good. We've also got this this gap that's on the charts here. This was filled in immediately, but we didn't even test this one. So if we want to start being very positive again, we're actually going to need to fill in this entire gap and not come down from it. This creates, you know, this is obviously an island as a result of the recent price action. So I would be looking out for the potential, like we see on other stocks, for, you know, islands in the stream, nothing in between, to be kind of become the norm for us, right? So just look out for that in this region just here, as we could potentially do that sort of shite. As well, you know, this is not good. This is a breakaway gap, okay? And this gap here was a measured gap, right? So you've got the difference between, if you want to go and look it out, breakaway gaps, measured gaps, breakaway, measured, go check it out yourself. And this obviously is then, as a result, had that continuation as well on the way down. Cool, great. And yeah, anyway, I think this is shit. I think I've said that now. Cool. What was the next one? Oh, do I want to look at oscillators, etc.? I've kind of not got much time for this. Bearish, not bullish. Bearish, not bullish. Cool, excellent. That's enough of that then. BTC, XTZ, no, Hexo was the next one for Merrick. No problem. Cheers, pal. It is what it is until it is what it isn't. So there's a nice little shout out to us all. So, yep. I think this is a phrase which will probably start to stick with you after a while, right? It is what it is until it is what it isn't. What is it? It's still what it was before, and it's still negative, right? So that obviously frames my thinking coming into this chart here. This is bullish divergence. Previously, we didn't really have much bullish divergence on the way down here. On the way down here, we didn't really have much. Now you've got some bullish divergence between these two lows, so that's good to see. And this is only between these 2 points I was talking about. Now, naturally, between these points, we had a shit ton of bullish divergence, and actually, we turned things into went into bullish conditions pretty much there at that point. We didn't get any follow through, right? We didn't get any follow through. So at this point, we turned things into bullish conditions. We didn't get any follow through. We were not able to take out any of our prior highs. This one here specifically as the example, right? So what does that mean? It is what it is until it is what it isn't. And while it remains below that, it is what it is. While it remains below that, it is what it is. While it remains below that, it is what it is. Now, this movement down here between these 2 points here, and the fact that there's this divergence does give us, of course, the indication that there could be a wedge, etc., which would give us a movement up the way. And I just want to remind people that it is what it is until it is what it isn't, and that until we're actually above the price point of, at the minute now, 182, that we have to remain very negative, just like how we had to remain negative while we were below $2, while we were below $2.05, while we were below $2.66, while we were below 744, and while we were below 826. High, low, lower high, lower low, lower high, not a lower low, lower high if you want to call it that, who really cares? Lower low, somewhere in that region, sure, maybe here. Lower high, somewhere here. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. And until we're above 180, it's a lower high, which is obviously a downtrend, and it is what it is until it is what it isn't. Merrick, buddy, the analysis all the way down here more or less remains the same. Just little things that I want to point out is that while you're in all-time X, whether that's all-time high or all-time low, you're very often going to find periods of bullish or bearish divergence. Bullish during all-time lows, bearish during all-time highs, and it isn't necessarily the same. It necessarily isn't the same as bearish divergence during a range. But you still need to think about it, of course, and you know, it is a massive warning sign. Right, so is there anything then out there that could potentially turn this thing around for us right now? Yeah, well, the best I could hope for is for the at least for this to kind of sustain itself, right? So in the meantime, I'm looking for this thing here to kind of sustain itself, this sort of formation that we've got in the RSI. I want to see it breaking up towards the bullish control zone. If it doesn't break into the bullish control zone, I know we get a bit of a bounce here on the prices, then, you know, great, cool, that's fine. Because at that point, I'll be looking for it to not break into the bearish control zone, and I'll be looking for it to then, you know, try up again. What am I saying by when I say that is essentially the same thing as saying that I want to see this thing operate at least in a sideways area, at least, you know, but actually, you know, legitimately what I'm saying when I'm saying this is that there is this potential pattern on the charts just here, and that because of the fact that this thing has gone up to an extreme point at a high at 81 to an extreme point at a low at 16, that you've got a full range there of 70 on the RSI, and that from no matter where you are in your lows, adding 70 onto the RSI brings you up into the bullish control zone. So no matter what is that if we can actually get a breakout past our previous highs, then we have the opportunity to turn this around from being what it is and turn it into something which it isn't right now. But let's remind you, it is what it is until it is what it isn't. That's your Hex OTA. Thanks, Merrick, for that shout out again. All right, BTC or Tezos, or BTC Tezos, or Tezos BTC. I don't know what you're asking for there. Let's just look at the XTC BTC chart here. This is Tezos versus Bitcoin. Nice resurgence in the prices recently, of course, as well. Let's not fool ourselves. But this is a nice resurgence recently. So comparing with the Hexo chart here, just remember, right, the Hexo chart, this was you know, it was going down. It is what it is until it is what it isn't, right? You know, what have we got here though? What have we got here? Well, we have got a higher high, right? A higher high followed by a lower low. So sorry, this is a high followed by a lower low, right? This high in here, how was it actually higher? Was it actually higher? Back off, drawings. Was it actually higher? Or were they wicks? The body closed there. It was higher, but then on a 4-hour time frame, was it actually higher? No, it wasn't higher at all. So this is the first so it is what it is until it is what it isn't. We were aiming for this move down here, I guess, in general. This is at 0.000007, and we made it down as far as that. So did we make it 90% towards the move? I'll just use Fibonacci to get that. I'll look at see whether or not we made it past the 886 essentially. Here's the 886. We made it past it. We've done 90% of the move. We can consider this flash to be filled in now. Not to say that we won't actually continue on down the way, because as I say, it is what it is until it is what it isn't. And what is it? It's down and all that. But we've got the first tentative signs of potentially turning things around. Okay, so there's this wedge. This is obviously drawn in badly. Look at my face. Do I give two shits that that's drawn in badly? No, I don't. We've broken outside of it at the minute. Great, fantastic. But what is it? It's a high. Now, is it a higher high? Is it a higher high? Well, we were discussing this with regards to the 1 hour time frame just there, and over here on the 4 hour time frame, zooming on in. Okay, yeah, this was higher, right? This was higher, but zooming on in here. That was high. Sorry, that was a high. We're zooming on here. This here was lower. So can you get a higher high that's followed on from a lower low? No, you can't. They cannot do that. You cannot get a high that becomes a higher high if in between there is a lower low. Okay? On the off chance that there's somebody who doesn't know who I am tuned in right now who wonders what that is, I have a legitimate quality, full-on, actual, proper, professional bingo hall bingo machine sat beside me here, and that on Tuesdays and Thursdays I do ticker bingo. So tune in back in tomorrow and I'll be doing ticker bingo with folk. Ticker bingo is whenever somebody donates $20 or more, the bingo machine lights up, goes on, sucks the ball up into it. I've got a camera that can zoom in and show you the balls jumping around inside. All super exciting, loads of fun, good laugh. Anyway, you cannot have a high become and then a higher high when you've got a lower low in between, right? That's a lower low. So forget the ideas of this 4 hour time frame or the 1 hour time frame or any of that shite, putting that in as a higher high. Nevertheless, here we are, and we're putting in a high now. Can we get a higher low? Because that's what you need between. A lower low, no, but a higher low, yes. Can we get a higher low and go up as it stands then? Because we've got a high and a higher high, and because we've got a low and then a lower low, we're actually in a broadening formation. So right now, if we actually put in a low, a higher low, then what we're doing here is we're stopping this. We're stopping this. If we go back down at this point to test, if we go back down as far as here to test against the wedge, as the retest of the wedge, then we've also done the broadening structure, right? And this broadening structure could fuck us up in a number of ways, because without it, while the apex of a broadening wedge is within the mid-range of the wedge, then I prefer to look for it to turn into a diamond, which is an unusual and less well known and recognized pattern on charts, and it's not that great and everything else, right? Or whatever. It's not, whatever. So if you want to laugh about Rocky loves a broadening wedge, which I don't actually, then just know that I like them if they're actually moving at a certain angle. And I'll check your thing, by the way, AV80. Thanks so much for that. I really do appreciate it. So anyway, we are aiming up towards this area. I do want to see that happen. For us to get there, then I want to see a lower high. Currently, we've pulled back a wee bit. If I just drop down to something like the 1 hour time frame to make it a bit bigger, and then drawing a thingy here to this high, you can see that down past the 236, down past the 382, at the 50% area, we could put in a lower high anywhere here at the 9 or in here at 0.87. But if we actually drop down to 84, that's okay. Actually, that's okay as well. If we drop down to 8 flat, then we're really messing things up, okay? And that's actually just continuation is then becomes incredibly conceivable at that point. But what you need to see happen here is for the Tezos prices to do well versus the dollar. Here's the same kind of general wedge that's been in play. Here's the breakout from it. Here's the lows along the way. Here's a high that's come on with another higher, with a high that's moved into a high. This is actually the high. Here's a low. Here's a high, which is a ever so slightly higher high. High, low, higher high.
potential for us to be with a higher low here, the potential for us to be, well, this wedge idea kind of did actually break down slightly, but it only went to fake out territory. This actually, you know, has a rectangle. Well, okay, let's just talk about a rectangle for a second. There you go. That's an actual pattern, by the way, as messed up as it is. That's an actual pattern. You could obviously talk about this pattern as being more or less the same as any of the other patterns that are out there. It's just it's an Adam and Eve that's got equal highs on your Adam and Eve. It's not a descending triangle. It's a broken descending triangle. It's sort of, you know, essentially it still adds up to the same thing, that you've got an area down below and an area up above. But what in terms of pattern ideas is that really, rather than looking within the consolidation for the demand, the elasticity of the thing, and the elasticity of demand, elasticity of price, etc., elasticity of supply, you're looking up here towards 6.8 as your target. Oh, it was 6.8, and the first target is 6.07, and we are aiming for there still, and this consolidation. So if we can actually do that, then that makes sense. Excellent. So that covers up. You can also check out my TA from yesterday and previous days for Tezos on that front, and that's Tezos versus the dollar. So here's Bitcoin versus the dollar. So I've done everything that you could have asked for on that front. Yep, probably going to visit back down there 57,840 or 646. It's incredibly likely, because these flashes almost always get filled, like we talk about. It's the best indicator in the world that I've ever seen. You know, as a single indicator, in terms of what indicator means. In terms of like the best mathematician that ever came up with indicators in the world, that's J. Wells Wilder Jr. The best indicators as overall for indicators that exist in the world are the RSI and the DMI, without a doubt in my mind, and that's well done to J. Wells Wilder Jr. for that. That's my own personal opinions, and I don't really care about any objective opinion on that front. But here we have it. So my own one is based off of DMI stuff, and it is and in terms of a singular aspect on the charts, and a singular price point where it says this is where prices could go to. So you're talking compared to Fibonacci, compared to Bollinger Bands, compared to moving averages, compared to Ichimoku cloud, compared to you name it, anything at all, wedges, parallel channels, anything at all. The single best indicator out there in the world is the rock outcrop flash, and many thanks to the giants, those soldiers I stood on in order to develop the thing. Here we are consolidating above the 236 on Bitcoin. Any moves that we have back down is just mid-range on where we are right now. The inverted head and shoulders idea of this, which is an idea, essentially remains in place. I'm very much not strict on pattern type ideas, because all roads lead to Rome, and I've got I'm able to see what it really means and explain it, as I have done a few times already in this show today. But this range that we're looking at here, between 59 down to 53, is a $6,000 range. You add that onto you know, the 59, it takes you up to 65k, 60 whatever, and we're up here back towards our previous highs again, looking out towards 62,000, 63,000 along the way for the for of course that golden pocket, the 50% area in there. Yes, you know, clearly that there's like support and resistance in here, as you can see. You know, clearly this is an inflection territory for us in here, but I mean, obviously we could bounce off of it and whatever else. You can be aware of it. I'd be aiming more like for there, really myself, to try and see if we can get to trend that way. This would make more sense for me. Why? Well, you know, it forms out like that instead. It's fairly obvious, I think, once you like look at it backwards. Right. Last thing then, I suppose, on this front is that yes, bearish then bullish, neutral line maintained, defended. Yeah, come down, fill in that gap, break that line, and push into the bullish control zone again, and we're off to the races. Otherwise, we're failing at that zone, failing the inverted head and shoulders, and we're moving into bearish control zone. Take it again, taking out 56,000. I anticipate 53,000 definitely. If we take that out again, you know, like, you know, really, you know, so look out the shitty fuck for that. And if we take out 53,000, then it's off to the bollocks face races we go, right? Aiming down here ultimately perhaps towards the 236, which is on this chart here. Just remove that. Aiming down here towards the 618, but rather than actually thinking about it along those lines, because of the consolidation that we're having right here right now, and the way that this is coiling and springing, the way that I want to look at this right now instead is to talk about where the is to zoom on into the charts, bring it up full screen, blah 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 blah, is to look between this most recent low and this area of inflection here that we've been experiencing and talk about this, because we know that I'm talking about this as a neckline. I'm talking about this as a crucial support area. I'm talking about the ability to trade within this range and it'd be fine from on the RSI and the bullish and bearish control zones to wrap this up entirely and put a nice cherry on the cake. If we do move down and you're looking for one singular target to look to right here right now as a profit taking target type thing, then 49,800 etc. would be the one that I'd be looking to just off the back of this in terms of this movement, right? Because this would continue on, and this would quite likely to turn into a wedge, with that being your target down below. Okay, so that's everything you need to know. Now, all you have to do, because I haven't told you exactly what to do with just one thing and left it so that it could just ruin your account for you, and you have no sense of responsibility or anything. Instead, I've left you with a degree of a sense of responsibility, where if you are trading any of these things, you're going to need to choose your own entries and exits within fractions of a percent of the numbers I've already said anyway. So really, and then on every one of them, it's actually unfair for me to say you need to choose your own entries and exits, and then you'd also need to and choose your own risk management, right? Okay, so you really want to learn how to trade. And last thing, let's see, what was it here? Happy BD, Benza time, Hint crypto, please. Yeah, we'll take a look at Hint in a second. So that's the last one. Sorry, somebody else asked me for something in the chat there, but they didn't donate or whatever, and we totally run out of time. So Hint, I can take a look at. Whatever it was the other person asked for, not so much. Sorry, pal. All right, bull flag? Question mark? Is it bull flag? Question mark? Is it? Is it? It's a bit much so far, but this is a big fat chart. Let's look here. So we moved down to 382, found support, broke above the 236, didn't come back down to 382, up to the 236, found support, and then up again. When we went past there, we actually retested the breakout past our prior high, and then came back and tested that area again. This all happened. So again, bear this in mind. I'm telling you this for a reason, right? See, whenever I tell people what happens like this, and I explained this yesterday as well, I'm telling you this for a good reason. Pay attention to these things, okay? Then, so I grabbed this and I pop it up here instead, and I point out the fact that this is where the 236 is, and that the 236 here is obviously where you'd be looking for a bounce. But if we did drop down, we would go into the 382 over here, whereas the last place we had a knot in the charts, right? Which is a knot, which is actually where we were testing at our prior highs, right? So you understand the context of why we would be aiming towards those zones there, and of course then the exact point at which you would be ditching your trade. Bear in mind that if this is going to be a pattern, this is obviously a wedge as well, in terms of just that area on its own itself there, but it's obviously the bull flag, or the half staff flags, whatever you want to call it. It's not actually a half staff, but Peter Brandt would call that a half staff. I don't know why he does that, by the way. He's been around for like 5 decades, trading constantly, and he's about 110 years old, so you'd think he'd know better by now, but there you have it. Down here then, from our last area of inflection, however, up to this highs, where have we come to? So bearing in mind what I said previously, how we'd made it to the 382 in this period. Did you bear that in mind? I told you to categorically, specifically made sure you would remember that. Now I'm going to draw a little circle here with an arrow coming out of it, just like I had over there, and point out the fact that this has happened just now. Then I'm going to remind people to remain cautious that if we did have this acting as a wedge, then we moved up towards fake out territory on the wedge. If we moved up towards fake out territory on the wedge, then we might find a bounce at that zone, which might carry us a little bit lower. But providing we don't take out the 382 again at this area, and the 382, what fuck difference does that make? What I'm really saying is market structure. Sure, we don't take out the lows that we've already put in. What fuck difference does that make? Market structure. What are you talking about? I'm trying to say, so long as we can bloody trend. If we have got highs followed by higher highs, which is what we have so far, and lows which are followed by higher lows, then we're trending up the way. But if we actually put in a low which is lower than that, and then we've got a high which is lower than that, then we're trending in a downward direction. So a failure there would be a lower high, and a lower low at that point would be a lower low, which would be a high, a low, a lower high, a lower low, and officially you'd be in a bearish trend. You'd have to watch out for that overall on that front. Okay, so this is the significance of these sorts of areas, and that's the significance of this area again right here. None of that is a fractal. That is me deliberately choosing stuff from the charts to show you deliberately, specifically how the TA would work work in that area, and specifically using exclusively real legitimate reasons from TA, such as patterns like the bear flag or bull flag, such as a pattern like the wedge, such as market structure, such as higher highs, higher lows, understanding trend, and Fibonacci, to actually do real TA instead of this sort of absolute out and out shite that anybody that ever talks about a thing called a fractal is ever talking about. Okay, so if you look out for that in your world, then you'll remember that the people who could have done it this way, we have a fractal on the hint chart. This is the fractal on the hint chart, right? You've got mad fuckers out there that would do something like this. If I just ditch everything in the bin, they would do something like, they might not even know that this tool exists on the chart, right? So you know, they might not know this tool exists on the chart, but they would do something like this, right? Like this, you know, essentially, you know, now that I've shown this today, if you see anybody else out there in the world using a tool like this, just be aware that that they've just copied me and they've just showed them that that exists, and they still, even though I've said that these fractals are bullshit, they just don't know how to do what I do, so rely on this sort of crap. This is what they'd be looking at, right? This is what they'd be looking at. This is what they do. That looks beautiful. How compelling is that? And you can imagine how many more thousands and thousands and thousands of subscribers that I would have if I were to talk about technical analysis in such mindless, moronic ways as that. That's a stupid thing to do. It's a stupid thing to do. It's categorically stupid. Now, here, the other stuff that I've done, that's not so stupid. And why not? Why not? Why is that less stupid? Well, look here, you've also got this on the go, right? You've also got this on the go as well. Whoa, that's not working for me in that sense. But it is broadening, right? It is broadening. So you've got this broadening structure on the go. And I did just talk about broadening wedges, and this is what I wanted to talk about. And I did say that whenever they're going sideways, then the apex of it is somewhat useless compared to if they were to look at a broadening wedge which is going upwards or downwards, where the apex of it, would that be useless or not? Well, the prices of this thing could absolutely come back down to 1345, and where's your fucking fractal then, eh? Where's your fucking fractal then? I tell you where it is. It's right up here. I tell you what it's doing. It's where's your, I tell you, right. Oh, that's it. That's it here as well. I stayed on for 15 minutes, 15 minutes longer than I really would have. Jiu-Jitsu guys, Rocky teaching fractals. Well, essentially, I'm teaching people who use no, I'm not, man. If you want to say I'm teaching fractals, you could do. I just essentially showed you. Everything that the reason why fractals don't exist. The reason why fractals are stupid. Fractals are stupid, right? Fractals are fucking stupid, and anybody who talks about fractals is a fucking moron, and that's why they'll never, ever, ever do a collaboration with the likes of Astro, because he's fucking stupid, right? And that's just the fact of it. It's a fact, okay? So that's where we are, and that's not an insult or a slight on his character or anything else. That's a fact. Anybody who talks about fractals isn't talking about technical analysis. Anybody who talks about, who then says that they're doing is technical analysis, is a liar. All right. So what would you prefer that his name is, right? So that's where we are with that one, and I'm a tuning out. Boom, ba-dum, bam, bam, ba-dum, bam. And by the way, just point out that we've had another YouTuber in this chat here today. I actually really like people in this community that are doing stuff that is within their wheelhouse to try and help people, right? So you've got the likes of Marantz Rants, who is a YouTuber who does stuff that's in his wheelhouse, right? He talks about things he's passionate about. He talks about news and stuff like that, right? He's passionate about this stuff, and he's just there, and he's giving content out for people and engaging with people and reading their comments and reacting and everything else, right? It's all within his wheelhouse. Then you've got likes of Astro, who's doing technical analysis, and the guy's a fucking fake. He's a phony, right? He's an absolute out-and-out phony and a charlatan, right? So, you know, I'm not negative against other people who are doing YouTube stuff. I only really want to point out the fact that I actually am very serious about what I do, and when people come along and pretend to do what I do, it's highly insulting to me, and that everything that I've said so far, while might be considered to be insulting about somebody else, is much, much, much less insulting than the insults that I get given whenever someone like Astro comes into my chat and talks here, when I'd rather they fucked off. Okay, How insulting that is, that he would come in and try and steal my audience away and pretend to be doing technical analysis. That is heinous and unforgivable. And he did the same thing inside Jamie's chat as well, so he can go fuck himself, eh? So there you go. Right, excellent stuff. Boom. And did I say that about Marant's rants? No, I did not. You'll notice the difference there. You'll notice the difference. And by the way, it's not like I agree with everything Marant's rants says. Marant's rants, he personally really dislikes Ape Andy. Who's Ape Andy? He's a freaking mod on this channel, right? Ape Andy, I really like him. So nothing to do with Marantz as a person, nothing to do with his opinions. He's absolutely allowed to have different opinions to me. It makes no difference to me. But then when somebody comes along and does the thing that I do, that I care about and passionate about, I've done for decades, and I really want to help people with, and does something that undermines the work that I put in, then no, I don't stand for that. I don't stand for that, okay? Right, excellent. Anyway, I know that happened months ago, but we're talking about fractals. And we're done here. Yeah, so time for the reverse roll call. Thanks to people for all of this. Really appreciated. You got AV80 Echo XD Marantz himself in there. And by the way, I didn't say anything positive about Marantz because he gave me $3 fucking, by the way. It's like I didn't say anything about it. Astro, who I've said a bunch of negative stuff, gave $50 to Jamie, and there I'm saying about stuff. So there you go. You know, in terms of like paying for me to be positive, no, right? All it is I'm honest. I don't watch Marantz's stuff, right? Because I don't, right? But you know, there you go. I'm at least honest about stuff. I always will be. I value way too much to not be honest. Then you got Not Your Dad. Thanks so much for that. Bad Mama Jama, Phil, Christy Callahan, the Immortal Cachito, Jeffrey Camplin, all of you who helped out there with the channel. Thanks so much. And if you have been watching along so far and you think, oh, I saw the whole thing, be aware that actually the video started half an hour or 40 minutes before you actually tuned in, because I was doing a Patreon only stream at the start of the show. Okay, brilliant. Thanks so much. And thanks so much to everybody for tuning in for my birthday yesterday. How amazing was that? I had a really great time, and you are the most amazing people in the world. Honestly, the most amazing people in the world. In fact, you know, I might joke on Twitter about how my subs went up and down and used it as part of my chat for the TA today, but the truth of it is that I don't mind. You know, I could stay on the same sub levels that I have at the minute now forever, and it wouldn't really matter to me, because I genuinely absolutely appreciate you all 100% fully. I know the likes of Shadow Lepton, of Scott Walker, of Apple Blossom, of Merrick Sanders, of Jiu-Jitsu Guy, who Tradesbond, my brother, Ghost of the Dead Money, Chris, Colin, Merrick, Anti-Fanatic, Splendid Things, Sir Pushkin, Dan Ernst, Amber, Stephen, Exhale, and Dead Money, and Brady Pearl, and Banana Fridge, and Fapping It, and Lucas, and Vic Vince are all amazing, real, full people, and every single one of them, just alone, individually, should be enough for anybody in the world. And the fact that I've got 11,000 subscribers out there is more than enough for me. Much love to all of you. Thanks so much for being a part of what we're doing here, and I'll catch you next time.